I started in 2021. My first deposit was $300. By the end of 2021, it was close to 700K. I do a lot of knife catching, and knife catching is probably one of my main strategies. My goal is generally not to guess the outcome. I know the price will go up, or I know the price will go down. I log into this wallet and I see balance, which I think it's a bug. That thing did X. Roughly.
What? Yes, you got it right. That's a 700x. And now you might be wondering, but why should I listen to Nick? He doesn't even activate his webcam. Well, you got to know one thing. Not everyone can be as handsome as me and pronounce the H at the wrong places. No, but let's be smart for a second. Most of the big, good traders, they're going to stay anonymous. Why? Because it attracts too much attention and problems that they don't need. And Nick is someone that I followed for a while, and damn, this guy is smart. He got an amazing system, but still though, he's a bit stupid because during the podcast, he gave away way too much information on how he's trading. You can literally copy his system. And this guy went even a step further by giving away a masterclass that he could sell for 1,000. And this is at the 25-minute mark. So if you want to skip there, you're free to do it, but you're going to miss all the good stuff from his story and how he started there. And I might be missing pieces to apply this strategy. But I have to ask you for a favor before we start. Yes, click on the subscribe button. Why? Because it makes me money. No, I'm kidding. But like this, well, it could help me to make money still. But I can bring better guests on the podcast because they're going to see, hey, well, how many subscribers you have on the podcast. And see, oh, there is a lot. When they're going to come in. So if you want to help yourself and help myself, you know what you need to do. But let's get in. Those trades need to be done, man. Don't know why I talk like that.
Yes, because I was entering at around 100K market cap. When I found it, the market cap was like 65 million. And it went up to 100.
I'm super happy to have you on the podcast today because every time when I see your post on Twitter, I feel dumb. And I'm like, okay, that's perfect. I can learn something. Because I think you had a pretty good run, and we will go into numbers later on. I saw like you did a recent trade on Bitcoin where you basically bought the bottom, right?
Yes, and that trade was actually a funny one. It was Friday evening here in Sydney around like 7:30 p.m. I was at the pub with my friends and I saw this dump on my phone. Constantly checking the price because there was a lot of down pressure. And yeah, I just one clipped it, market order from my phone. And then I kept on drinking. I wake up and I see it's up 10%. And I'm like, well, should I post it or not? Like, I like posting good entries. Just,
yeah,
I don't know, for inspiration, maybe for traders to focus on their execution. But at the same time, I'm like, nah, I'm too hungover to deal with any of this. I just took some rest on the day. And then on Sunday, I see that massive pump from already, it was Monday though, it was Sunday evening. The point is, I see it another leg up and I'm like, damn, what an entry. Even though it's round trip today, like I still have 1/3 of it left. I always DCA out.
Okay.
So yeah, that's one thing I'll cover. I kind of wanted to have this interview a bit of structure as well. First of all, thanks for having me here. As I mentioned, haven't been for a while, so always a pleasure to have a nice talk about markets. Yeah, just have a good conversation in general.
Yeah, but guide me a little bit because now you say like you just went into the trade at the bar while getting drunk. And I'm like, that seemed just like ordinary Joe got lucky once. What made you want to take that trade at the bar?
Well, that's a good question. I do a lot of knife catching, and knife catching is probably one of my main strategies which I apply up to this date. The main thing which I always keep an eye for is just for a good reversal point. And at that stage, it just like I open the chart, it seems like a pretty good place where I can take some risk. There are some, like I would say, maybe more of an intuition side entry points, but there was a good volume coming out on a previous candle, a little bit of a chop down, and I entered on a pullback, so it wasn't direct bottom. It was already the first signs of reversals, which I usually look for. I actually got this trade ready in a presentation, which I will show later, because it shows my entry point and my exits, just to show a bit more. So the entry obviously got there a bit more lucky, but I would say from another perspective, it's like it was in the moment I saw price chart and it looked like a good buy for me. So there was definitely some part of intuition just simply from looking at the charts for so long.
We can go in detail into that trade just to get an idea, like how much did you make on this trade?
That trade
so
was
far?
2.5. That one was 2.5 BTC entry, one click.
2.5 BTC. So we are talking about 200K or something like that? 250K?
So far, I took around 13%. So if you take it on it's after fees, P&L is around 23K, 20 to 23K.
Nice. What was your best year actually in trading? Like the one you made the highest amount?
2021 and 2023, they're both
Okay.
equally good. 2021 was the year when I boosted my deposit and where I actually made money, and went out from the stage where I was trying to do something to find profitability to a stage where I actually had some proofs where, well, damn, this is working. Even though there was pretty big journey ahead back in the day. And as well, I would probably start with a bit about me because some viewers won't even know who I am. I haven't been that much of active on Twitter in 2024. I've been taking a break from trading, etc. So for everyone who knows me, they already know me from Twitter. For people who don't, I've been trading crypto, well, let's say properly trading since 2020. And even though I heard about it much earlier, and over my almost 5-year journey, it will be 5 years closer to the middle this year, I've tried various different things. And it's actually what I'm going to cover here a bit more, and in particular, how to find yourself in the trading world. It's going to be more beginner friendly, I'd say, and I'll still cover some more advanced topics for more experienced traders and for beginners to understand what they need to look for and essentially how they need to think of trading, because that's probably one of the biggest problems beginners struggle. Like they have wrong perception of trading, wrong idea about it.
You said you boost your account. What do you mean by that? And then also on that year, so you said the best one was 2021 and 2023. So how much does it represent? Like what were the gains?
21, like I started in 2021. My first deposit was $300. By the end of 2021, it was close to 700K.
Wow,
And
you started with $300.
I started with deposit. I topped up it a few times, and as well, I would say properly, like not from $300 to 700K. It was $2,000. Like when I actually properly jumped into trading, and over the course, I would say slightly about a year, because I started in 2020, and it took me probably around 6 months to just fuck around and find out. Am I allowed to swear here a little bit?
Yes. Yeah.
Good. Good. Yeah, and from 2K, I will explain as well my perspective on how I see trading, and even up to this date, what I'm looking for and why I'm still in the game, because I already there were moments where I was thinking of actually just quitting trading and just moving into business, because trading, you can do it only for so long. And even though I realized I love it, I always keep on opening charts, always, just in Twitter, watching for what's happening. I treat any financial market like a TV series, which just never ends. There's always something happening just from charts perspective, like, prices go up or down, but there's always some drama to it on crypto Twitter especially. And it's just like a TV show to entertain the brain.
That's really interesting. That's a good take. You were sharing that you started with 300 or about 2,000 and then landed on 700K.
Yeah, well, it wasn't landed in one go. It was 1 year of grinding and just taking quite excessive leverage back in the day. It was always leverage trading.
What do you mean? What do you mean by excessive leverage?
Excessive leverage. Well, I'm pretty low risk tolerance. Considering I trade crypto, futures, and just in general crypto, I still consider myself low risk, and I always place my risk first. But back then, anyone who traded back in 2021, like the end of 2020, beginning of 2021, remember how crazy it was. And in my particular case, I was scalping mainly the breakouts and just positioning front running large limit orders. But one thing I quickly noticed is that I take quick 10-15% scalp, which is already a good percentage wise. But there were pumps like Anchor, BTT, BTS. Like there was as well later Sandbox, Mana, these type of pumps, and they pumped 200-300%. Anchor pumped a couple of 1,000%. Doge pump was infamous, and these trades let you like just, I don't know, have crazy percentage gains if you
Yeah.
enter at the right time and you just sit long enough. I was quite lucky
But
though, to
then
be honest.
how much did you have during the bear market then? Is it like, because a lot of people make money during bull market, but how many people keep their money during bear market?
Yes, and I can't say I didn't give away on the bear market. It's probably best to as well share a bit more of my trading experience, because in 2020 and 2021 I was scalping. 2020, it's when I started doing algo trading, and more in particular startup, just pairs trading. And many people know this strategy. And despite that, one thing about my journey, I actually never wanted to be a trader in the first place. I haven't planned it or watched some weird ad, where people promise to teach me how to make money online in trading. My initial goal was to learn about financial markets and how to invest in them. Something long term, and just let the compound interest do the job.
Okay.
I even picked finance as my degree, which was back in 2016, 2017, when I first had this thought that I want to learn financial markets, understand how to read charts. Because back then, I didn't even know what a candlestick is. Like, right now it makes sense, or you shall see.
Yeah.
I didn't even had an idea that there is an order book. I just, by chance, heard about Elliott wave theory, which is one of the approaches like traders use in technical analysis, and I wasn't really impressed by the theory itself, even though back then I quite was. It's more of an idea that there's some sort of approach which can lead you to understand where market will go. I don't have this belief right now, but for a guy who completely knows nothing about trading, investing, finance, it was quite a big discovery, and I like, damn, if there is something, I would like to master it.
Okay. Yeah. You're quite known for catching knives and scalping. So I want to understand, like what is your edge today? How do you find a good trade? And teach me, like it's my first time trading.
Well, that's a good question. How do I find a good trade? First of all, I sit at my computer for pretty much daily. And so I always just keep an eye on the chart. And a lot of stuff what I trade, it's coming directly from market price action live. It's rarely I do trades where I'm just scanning the market. These have like, bullish triangle. Oh, this might go like pretty well in the next maybe week or two. Even though I still do trade these, but mainly on spot, just to get some exposure to some potential good ideas. No leverage, just to have some exposure. Most of the knives though, most of the scalping stuff I find live just by watching screeners. In my case, it's mainly the spread fighter. They have great set of tools for finding volatility as we speak, literally at this exact moment. And yeah, I just look at stuff which sends hard and wait till the moment it's about to boink back. There is a bit more to it, but like in a nutshell, that's their idea where I take my knives and what do I look for? I essentially look for big volume spikes intraday.
So we could say that you have better skills at timing the bottoms.
I can't say that I have better skills at timing the bottom. There's one question which yesterday you made a post that I will be coming on the podcast, and you asked like what question should I ask him. There was a question where how I determine if breakout will continue with momentum or mean reward. And this if I answer to this question, I believe I might translate the core essence of my idea about trading, and how I perceive it. So to answer this question, how I determine if breakout will continue with momentum or mean reward, there are two key parts of it. First of all, I don't know, and no one does. All right, if someone claims that they know, they're either lying to you, just simply trying to sell you something, most likely a course, right? Or they're lying to themselves. Trading isn't about certainty. It's about probabilities and managing risk. Every breakout has a potential to either continue with momentum or mean reward. And my job isn't to predict there. It's just simply to position where risk makes sense. And second, I focus on market mechanics. When price consolidates for a while, just starts chopping, it accumulates liquidity in the form of stop losses. And we all know this. I hope so, because if you don't, you should. If the trading range breaks, it triggers a volume spike since these orders get executed. Pretty much stop loss triggers, right?
Okay.
And stop
So
loss
you mean like
cascades.
people like they place limit orders to say, I want to buy Bitcoin at X price on Binance, for example. And then when we are going out of the range, then those orders get executed.
Yes, pretty much. The idea is that how they teach you in any technical analysis trading book is that you place your stop loss below the recent low, right? Or you place your stop loss above the recent high, right? If you're shorting, or you place it above if you're short, you place it below if you're long. A lot of people follow this idea, so these stops obviously get cleared, which essentially is liquidity. There's liquidity pack. And price always goes there because it's either someone will push it or it will come there natural. Prices don't consolidate for forever. So.
And how do you find those liquidity? I don't know. You say which word? Like I was going to say pool, but I can't use the word pool.
So, how to find them? There's plenty of ways. One of the simplest one, for example, how I was doing it from the start and just even up to this date. I have a TradingView watch list, all perps on Binance, 400 of them, 400 plus. You just start scrolling from top to bottom. The best way, though, just the most efficient one, is just to take top gainers, over the past week, or over the past 24 hours and just go through them, because obviously you don't want to trade or look for something which doesn't have any volatility, any volumes, and it's just that. So the simplest approach is just to take most.
How do you find those limit orders? How can you see that they are here? That's the
tricky. You don't know they're there. There's nothing what will tell you there is a bunch of liquidity. There's a bunch of stop losses hiding somewhere.
Okay.
But you always assume they are because it is.
But when you see the order book, for example, on Binance, there's always those graphs that shows you, all right, there's X amount of people that want, there's about X amount of Bitcoin, for example, that want to be bought at that price, and then this price, and then this price. How come you can't use that, for example, or you just they just show you the order book just for a compressed part, or?
Well, the way you ask it is you haven't traded order book, and it's actually a great approach for people who don't have experience. It's also good for me since I've been staring at order books for almost 5 years now. So for me, it's already just foundation information that I just sometimes take for granted that people should know it, even though technically they don't. Because look, first of all, there's an order book, right? As you mentioned, there's if you take Bitcoin, there are at 90K, someone wants to sell this. At 92K, someone wants to sell this. 94, just depending what increment we take. This is just essential liquidity in terms of limit orders. I'm not speaking about this type of liquidity. I'm speaking about the liquidity in form of stop losses and liquidations. Because this liquidity is not something what you will find in an order book, but it doesn't mean it doesn't exist there. Because, if you take any chart, right? And if you, for example, from this particular price will move price 10% up, someone will get liquidated because they at least 10x leverage long, maybe 20.
Yeah,
maybe 50.
That's what I saw last time on your post. You had a graph of the liquidation for an asset. And how do you get this information, for example?
This is a predictive model. So it doesn't actually guarantee you that there will be a liquidation, yet it suggests you there could be one. We don't know, and no one knows except for exchanges where liquidations are located, because obviously exchanges are the ones responsible for processing these liquidations.
Yeah, that's why you should trade on chain. Because on chain we can always the liquidation. That's what I like.
Well, technically on chain there is no liquidation. If you mean just Solana trading.
Like if you trade perps on Jupiter or Hyperliquid.
Yeah, but they still use pretty much a similar story with liquidations, same as any centralized exchange would. Binance, Bybit.
Yeah. Just it's I know that I can see it because I have when someone places an order on chain, they say, okay, I
actually haven't tried it much on chain. Can you actually see liquidations on chain? From Hyperliquid, for example?
Yeah, I can show you. I've been building some stuff around that. Yeah.
Okay, I see. No, that's because even the big trade, with $200 million guy, it's public, it's on chain, everyone knows his liquidation price.
Yeah.
Because it's on Ledger.
Yeah.
That's something as well. Like for me, like I've done mostly centralized exchange trading. I've done some gambling on
Yeah.
Solana, and again, I also can be kind of moving slow in this direction of decentralized trading.
Yeah. And if you want to learn more about on-chain analysis, well, you should consider joining the Investors Boardroom, because this is clearly the best community for this. You're going to be able to trade with other people. You don't have to research alone. Some people will even do the research for you. This is an edge that we can harvest, and not many people know how to do it. In the Investors Boardroom, we do. I built this community because I was tired that there was no proper community around this. See you in there. And let's get back to the podcast.
Recently started trading on Hyperliquid, and I still just essentially all I do is just another venue for placing some orders.
Yeah, I mean, yeah, that's the thing. Like now the volume is still not big enough probably to move the market, unless we have this guy that like had a massive order, right? But that's the thing. Like if people start to move towards decentralized exchange, I think like it would be a little bit more fair, as we can know what's happening on it, because now like centralized exchange, they know where is your liquidation. I don't know if they give this information to other organism, but for the retail trader, you just like kind of peeing in the dark, I would say.
Yes, no, it's actually a really interesting thing with the rise of Hyperliquid, since I even haven't been keeping it in mind that most liquidations right now are public. But you probably even before Hyperliquid seen liquidation heat maps, right? They
Yes.
show you like big zones of liquidations, and these liquidation zones, they actually just estimation. So it's
Okay.
some sort of model, mathematical model, which which calculates based on given parameters. There's a few different approaches, but yeah, the idea is that it's a predictive liquidation model. And
Okay.
even though it's still helpful because it generally shows you some sort of extra layer of data which you can, make a trade based on. And I used to be using it a lot. But again, from my perspective, like, there's so much data in trading. You can be using on-chain data. You can be, if it's technical, you can be using MACD, RSI, or a combination of moving averages, or whatever you want to use. There is still some sort of fundamentals behind what's going on, and it's just essential what type of method do I apply to it. Because as I mentioned, like I trade a lot of market inefficiencies, I trade market mechanics. When I trade liquidations or knife catching, it's pretty much I trade like combination of market mechanics and market inefficiencies. So
Okay.
since what I covered earlier, any price consolidation, it accumulates liquidity above and below the range, just simply because there
Okay.
will be stop losses. There will be as well triggers of multiple different, you probably heard term liquidation cascade. Because
Yes.
like, let's say
There's a
if the
lot
price,
happening in the recent weeks, I think.
it is. And the point is how it happens is because, well, let's say the price been going down, right, for some time, it starts consolidating and the price starts going up, right? If price starts going up, you will have shorts who will be closing their positions because
Yeah.
some of them could have entered late, whatever the reason is. But if you short a close, it's a market buy or limit. But if you stop out, it's a market buy. Market buy moves the price higher or takes some of the liquidity to move for the price higher. And on the rapid moves, you will have stop loss cascades and liquidation cascades, because essentially it triggers the chain event where one stop loss pushes the price a little bit up, and it triggers another stop loss pushing the price a little bit up, and it triggers another stop loss, and it triggers a bunch of liquidations, and it's a spike out of nowhere.
Okay, so that's basically how you traded last week at the bar, kind of thing.
That thing at the bar was more of just like, drunk autopilot trading. But if I'm trading at my computer and I'm trading more systematically, like my goal is generally not to guess the outcome. I know the price will go up, or I know the price will go down. It's to collect that volume spike, right? Allocating risk based on my probability estimation. And this is the part which not everyone would want to hear, especially the beginners, because like my probability estimation isn't purely systematic. At this stage, it's a lot of intuition involved. I've simply spent too much time watching charts so that my brain does unconscious pattern recognition, if you can call it that way. And that's why the trading is a skill game. If you can't see things, like you can allocate probabilities to or just anticipate some sort of moves, you just need more practice and as well more trade deconstruction. And I can actually give an actual framework for beginners so they can actually develop the skill.
Could you show your screen as well? That would be better to understand what are you looking at on the chart or like
At
the
this
kind of
stage, I'm
data?
not looking at anything. Let me see. I'll just open up a tab.
Yeah, we can just roll back at one of the trades you did before.
Because I have a whole presentation here. Let me just find it. I'll just do it this way. Let me see if you can hear it. Let me know if you can see it.
Beautiful.
I've done this presentation ages ago, June 2024. Yeah, the information is still relevant. It's still something I use. I just never had a chance to show this. And since we're on a podcast, I thought like, yes, it's time for this presentation to shine. I've added a few extra things today and yesterday just so it can be more relevant, but the core concept didn't change.
How many hours you trade per day?
Well, whenever I'm around my PC, I always have some charts opened. Even though, again, in 2024, I've been trading less. Like last month, I've been trading more. So I would say, like, for example, yesterday, it was, I don't know, solid 5-6 hours just staring at charts while doing something else. As I mentioned, at this stage, I'm not just only trading. I'm just focusing on other areas, and I'm still kind of trying to retire from trading to open my business in other areas, so learning full stack development. So while I'm vibe coding, I have some charts opened here on another screen. And yeah, that's how I just keep an eye out. Because again, there are some days where you will find literal nothing. There are some days where it will be full
that's the
just,
that's the mistake I did sometimes. Is like I was trying to force find something, and then that's not good.
Yes, that's the problem as well. Many beginners struggle because they think they always, even not beginners, I also sometimes tend to enter trades, but especially beginners have this idea that like if you want to day trade, you always have to be trading. I always sometimes like, yeah, I haven't took a trade for so long and I might need just like this one looks pretty good. But the point is it looks just pretty good. It's not the best. It's not good. There is some sort of like hesitation in this trade. And usually this ones is where you just give away your money. If you can get lucky, again, technically you can play coin flip game. And if you do 5 coin flips, you can have 4 tails in a row and you can technically still win. But is it actually a strategy, right? I treat trading from a lot, like massively from probabilities perspective.
Okay.
And well, we're gonna talk about probabilities probably a bit later, but there's gonna be some covered in this presentation. Well,
all right, stop teasing me with this. Show me now.
Yes, let's start with the good stuff, trading market inefficiencies, and it's obviously from my perspective. First of all, I would like to start with the fact that crypto market correlation is really high. There are stages where it's not as high. There are stages where it's really high, especially like, let's say, Bitcoin dumps, everything dumps. This was from Crypto Watch.
Okay.
People might remember this screener. I love it. It's no longer available, but it's been a pretty cool tool. The point is, I just wanted to show correlation matrix. Like at certain stage, there was BTC to ETH correlation 0.9, XRP 0.66. Essentially, we have correlation coefficients above 0.5, except maybe like for a few different tokens such as Unfi, which no longer exists. But some traders may also remember Unfi, and I hope if you remember Unfi and you watch this, well, good memories. That was a hell of a ticker. Yeah, I don't want to spend too much time on this because it's actually just correlation matrix. Like, general ideas
so
of
that
crypto
means
market
like
is
when
highly...
the price evolution is similar across one asset to the other.
Yes, and it's mainly related to just market being related to Bitcoin. If Bitcoin pumps, a lot of tickers starts pumping. If Bitcoin dumps, a lot of tickers starts dumping. Let's say back in 2020 and 2021, it was more of a like heavier correlation, to put it simply. In current meta, it's sometimes not as strong, but the idea still remains there. The market is highly correlated. Even though, again, due to the rise of Solana, for example, and even more fractioned market liquidity, things change. Again, correlation didn't go anywhere far. So yeah, we can move next. This is my favorite type of visualizing the market. It's the spaghetti chart. We have pretty low volatility here as an example. The point is, what you see, chart with normalized price changes. The thick golden line is the BTC price. Colored lines are top 5 gainers and top 5 losers. Everything in gray is just like whatever is the noise. So it's other 200, 300 plus tickers. We just move alike. right? You see this whole thick area, it's a bunch of like more than 200 tickers. We just follow the market. We just follow the BTC. To a certain degree, something follows closely, something have some deviations, but the idea is there that this is how correlation actually relates to this market, because you will have some certain deviations, right? Like this was Q2 back then. Again, this is from April. I still have this bot running on my Telegram. Everyone can check it. I just didn't want to look for perfect examples since this one was already pretty good. Yes, and you have some sort of deviations at certain stage. Again, it tends to mean reward. Some active tickers at play could be actually like something what I will be more active at looking at, because if something
okay, why do you like to see this one, for example? What kind of information it gives you?
Because you see, like for example, I can pull out some sort of ticker, right? For example, out of this bracket of tickers who just follow the Bitcoin, and I'm like, oh, there's a perfect triangle, right? Especially if I'm a beginner trader and I'm trading technically, there's a perfect bullish pattern, right? Bullish triangle or whatever. I'm not a big fan of it, but still the core principles behind it are important. At the same time, it doesn't matter, because another ticker will have exactly the same story, and another ticker will have exactly the same story, and ultimately it's up to BTC to decide where it will move.
Okay.
Because again, you can have, I hope you can see me drawing, right?
Yes.
Yeah, I will be drawing sometimes as well. You can have like as well some price move, right? Like this, pretty neat consolidation. If you have the same story across 200-300 tickers, right? We just follow Bitcoin. It doesn't matter like what happens on this particular ticker, because a lot matters which happens on BTC. Or what also matters is that, for example, if BTC keeps on doing the same story, right? Let's say this is BTC chart, but we have another ticker which just starts doing like this, right? This is BTC. This is like some alt. We had some sort of consolidation here. Breakout from this consolidation. This ticker is currently at play. And while Bitcoin is consolidating, something happened in this, like some market participant decided to enter or whatever reason. But what matters is that there's volatility. There's volume spike, there's breakout. It can mean revert and just get back into the range. It can mean revert and continue pumping, right? It can just keep on pumping. You never know. But the point is, while the rest of the market is just like following BTC, one alt starts doing something. So
okay, so you want to check
you don't want to trade
what's
dead
happening
tickers.
there.
And yeah, it comes to the fact you have so many tickers. And again, if you go through Binance top 400, just like at this stage, there are like 410 perps on Binance, roughly. If you take 350 of them randomly, most of them are just dead. There's nothing happening.
Okay,
They're just
so you're
slowly
trying to
dying or
find the
falling.
ones where there's a bit more move, like.
Yes, I call it finding the tickers at play.
Okay.
Just because, again, you will have some sort of tickers which are currently in the game. Where is volatility? Where is liquidity? Some market participants actively look at this chart. And again, it also comes from the perspective that if Bitcoin is consolidating, this ticker went up, it will be shown on people's screeners, and other people will be like, oh, okay, so this could be a knife. Or maybe I just wait for a retrace and I just may wait for an entry again. So like, it just essentially creates a snowball effect where the more active ticker is, the more active it will be for a certain time.
Got it. Is that's like getting closer to momentum?
Momentum and mean reversion is just like, black and white. It's night and day. It's opposite sides of the same idea. As the core principles in terms of like, price action.
Okay.
But yeah, what I want to say here is that something which took me a while to just kind of like digest and start acting accordingly, more maybe like with a stoicism philosophical approach, is that there are some things like, you can't change about the market, but you can change how you react to them. And you can't change the fact that this set of tickers, like 200 of them, are just dead, right? They just don't move anywhere, and they won't move until something changes, right?
Okay.
But you can focus, for example, on this ticker, right? Or on this ticker. Like, why did they dump? Is there some sort of news narrative, or is there like big trader shorting it, or like some hedge fund shorting it? Or is it just dump after consolidation? After like, if something did this, right, and then dumped like this, obviously it makes sense why it could have dumped, because it's a correction. But if it's just something that was like this and just dump out of nowhere, why did it happen? Again, and you just like you take closer look and you try to understand what's going on there. And if there's something what makes sense, like as a trade thesis, you just might take some risk opening up a position. And you don't have to be always right. You just have to have an idea which you're willing to execute on. By the way, this is 24 hours. So like this whole picture shows the entire day of trading.
Yeah. I think I saw that on your Telegram bot before, yeah.
Yeah, the Telegram bot just shows this automatically, sends these charts every 24 hours, every hour, every 6 hours.
That's amazing.
So we had example of low volatility. We have example of high volatility as well. You can as well see how most of the tickers just consolidate around BTC price. There's something what stands out. And again, you can already notice some sort of pattern here. Like, people like to trade patterns. Bullish flag, some might call it, but it's not what's critical here. It's not a bullish flag. It's not about bullish flag. It's about there's ticker which is at play. You don't even have to ask why it's at play, but you just want to focus on it because this something what currently moves, and where is liquidity. Bell, for example, died, just simply out of nowhere. But this is high volatility. And why I love this chart is because I can receive a daily snapshot like, okay, so over the past 24 hours, we had low volatility. Or over the past 24 hours, we have a high volatility. Because if it's low volatility, it means market more tends to more mean revert. Right? Most of the just any volatility spikes is just being sold into or like bought into, and mean reversion is at play. Here, you can potentially anticipate more momentum because stuff has been going, and you never know when it will change, but you don't have to know as long as you're willing to take a risk with having some sort of idea in mind. That's my approach, at least, again.
Okay.
We also can see an uptrend. BTC went up, most tickers went up, but again, even during an uptrend, you can see this general line which kind of leads the market. Like market is skewed to a certain side. Yes, there are outliers. There are outliers from gainers and losers. But for example, this section, right? Like you can see highly correlated, obviously some variance there in this volatility, but the point remains the same. There's just a certain stage, like this ticker, for example, this highlighted pinkish color, it was really correlated, but at a certain stage it started deviating. Right over here. Something changed there. And usually when something changes on a ticker, it's when some market participant enters. It could be any big trader, it could be market maker stepping in, it could be just hedge fund or just prop firm entering, or it could have caught some crypto Twitter attention and there's, more volumes coming in. We never know, but it even doesn't matter what have really moved it, if, on the surface. You kind of ideally want to know, but not always feasible, of course. Well, this was uptrend, this was downtrend. You can see how price react during the dump. So Bitcoin have dropped roughly around 5%. Some tickers dropped around 30.
Yeah,
right? Some tickers.
That's really...
That's nasty. That's nasty.
Yeah,
and that's why I started with correlation as well before I started this presentation. Because again, you can have the best setup ever, but if Bitcoin dumps, there's a high chance your setup will not play. But at the same time, it doesn't mean it will never play because you have this thing, ONT, which kind of didn't really care.
Yeah, right? But that's one ticker. So you had to be on just that one.
Yes, and it could be just pure luck because you were in that ticker at that moment, right? If you just perps.
Yeah.
The point is, still, Bitcoin goes down, everything goes down to a certain degree because something will go down 30%, something will go down just minus 1%, let's say, or even maybe minus 10% roughly.
Well, it seems it goes down a lot more when Bitcoin goes down. It goes up a bit more when Bitcoin goes up, but when Bitcoin goes down, it seems that it goes harder for the alts.
Yes,
that we're seeing here
because lower liquidity and as well more panic across it as well. Specifically, usually we see kind of weak tickers at the bottom of the list. Doesn't necessarily have to be. It also depends. There's so many factors at play because, big time, why did it drop the most? There could have been some massive position sized from some sort of trader who, who got liquidated. And therefore, he pushed the small order book the most because of his, solid, just high open interest position. Let's say if there's a trader who's 10% of all open interest, he obviously will dump it harder if he gets liquidated on the general dump. Again, doesn't really matter that most in essence that like why we're going down, even though in this case it's clear it's BTC. But the point is market is correlated, and any of your good plays could have potentially just stopped simply because BTC went down. At the same time, it's also like leading to the fact that some people tend to attribute luck to their skill, especially beginners. Yeah. Someone could have randomly opened short because they saw some sort of bearish triangle. This happens and they're like, oh yes, I'm a genius. My short is printing just because I know about the market. In reality, like who could have forecasted BTC dumping? Maybe you can have some sort of probabilities about it dumping again, but you can't really know for sure. And another trader with the same success could have done coin flip. It's tails. Well, I'm going short. And he printed as well. Like who is more accurate in this case? It's just
coin flip
thought experiment, but just to keep it in mind that some of your trades will be attributed purely to luck. And you have to distinguish plays which are attributed to your luck or to your actual system and skill. If you wish to stay for the long term, of course. If you just want a quick buck, or most likely lose quick buck, it can be either. Well, what does it mean for you? It was quite a build up here, and your strategy have to answer a single question. Who do I take money from? Like, what do I profit from? It doesn't necessarily have to answer this question, and there could be profitable strategies without it. But a lot of, and most of the profitable strategists, they will be answering this question. They will know who they're profiting from. In my case, I know what I'm profiting from, and yeah, just a bunch of collection of my screenshots from knife catching. Could be old, could be new. The point is, it's a really similar idea across all of them. All of them are shorts, by the way.
That's interesting because normally we say knife catching when the price is falling down, but here we have the opposite.
I do have where price is going down, of course. I don't know, for me, a short knife catching works better. And a lot of these examples, I'll focus on a few of them. Let me, for example, show like ICX back in the day. You can see volume literally out of nowhere. Like this massive candle makes all other candles look like nothing. If you're able to, like this is already a high probability setup. What happened here is what so-called Robert James on Twitter likes to talk about it. I also really like this approach. Scott also likes to talk about it. It's called price insensitive buying or selling. And what happened here in particular, I will cover it as well later in the presentation, but if you look at the time, it might be too small, but I'll say it's 11 on a dot. It's my UTC time, AST, but it's 0000 UTC. So it is a daily close.
Okay.
At this stage, what happens, a lot of algorithms, as soon as they receive daily close data as their input, they start executing. Okay. And if it's a daily close as an input, usually it's some sort of long-term algorithm from bigger guys. Not necessarily from bigger guys, but it could be. It could be long-term. So they're less sensitive about price impact. So they can execute an order. This was probably around like $500,000 order in one go, closer to that, which is not a lot in a single order. But if it's a small illiquid shitcoin, you'll get massive price spike, which you can take advantage of.
So they
all
bought right before
to find it.
They bought right before the traditional market close. Is that what you say?
I call it the daily close because if you if you have your trading view or any charting system, like any charting platform, set for UTC time, and as well exchanges give you data based on UTC time, it will be when the UTC candle closes because you have the end of the day and the beginning of the new daily candle. And because you have daily close available as the input, algorithms receive this data and they immediately start executing. And I'll show this, like I have a picture which shows this effect more clearly. But the point is, quite often you will have prices just jumping out of nowhere. Exactly on a dot. Literally volumes out of nowhere.
Wow.
And this thing is a bit less at play right now for this, like it used to be pretty big edge of mine during 2024, because that was all I was doing, pretty much just sitting around my PC nearby the daily close, take a few trades, and just, I couldn't even not trade for the rest of the day unless there's something interesting. Because yeah, this was an edge. Right now you would see it rarely happening, but the reason I'm showing it, because that's how you want to think in trading. Like there's some sort of mechanics. In this case, it's just pretty much the fact that crypto market is highly automated. And if you learn how to exploit these automations, you can profit from it. Because again, for this big guy who did like I6 trade, let's say if you're doing long-term trading, like in the next day, maybe in the next few days, the price actually went up on this I6 trade. He just didn't care about average price from the entry, right?
Yeah.
In my case, I actually care about this price, because for me, it's a short-term trading, it's short-term speculation, let's call it this way.
Yeah.
And I'm willing to take this risk. It doesn't have to be, it's not always like this. Sometimes you'll have momentum ignition. But again, for me, this is a high probability setup. You never know if something will mean reward. You can only allocate some risk and be expecting some outcome. So in this case, like pretty much like from my catching perspective, everything what matters is your execution and your risk management. That's pretty much two key variables here. And you can see as well, like a bunch of other, I'll show at the end here. Also another example, right?
Yeah, that's amazing.
Also another example. Like these all show 11. This one you don't see, this one you don't see. Some of them just other, blowouts. This was more just like a trade, more, I would say, still good attributed to luck. There was good volume. Push and pull back. Oh, it's already a bit more of a different knife, but out of them were like this. So yeah, I'll show this effect on a different picture in more sense later. Well, there's, for example, BMX volume spike. This was volume spike literally out of nowhere. You can see price moved from like 0.2 to, I will come a bit closer. I hope this will follow. No volumes here. Massive candle, right? Weak. Pretty good entry. Stop loss just like, yeah, I try, sometimes I play stop losses if it's a good setup where I feel like I can play stop loss in this one, because the idea is that price move up so rapidly. If I'm right, the price will never reach, right? And this is what happened. Full retrace on an hourly chart.
And when you do this, like you do with some leverage, or you just go short spot?
As well, how I do it is that I don't keep all of my margin on one exchange. So obviously there is leverage involved for this reason. It's just a matter of how much you keep on your exchange. But I usually try not to go more than 5x leverage.
Okay.
On BTC though, I can go higher because BTC volatility is lower. So BTC can be 10x just due to margin constraints. But it's also coming from the fact that I'm not trying to, like a lot of beginners try to use a lot of leverage on their all capital, trying to boost their deposits quickly. And this can work if you have high probability stuffs which are working. But if you don't really have understanding what you're doing, you will just blow your account, most likely. In my case, if I lose this stack of margin on my account, I will simply just load another one. Usually it won't even come to that because, again, I'm a preacher of risk management. And I will try not to let it happen. And I haven't had for a really long time that my account been wiped.
Yeah.
There were some sort of losses, of course. I'm not saying I'm invincible. And how do you actually trade this? There is Trader Make Money. I use this software for my diary and journal entries logging. It's connected to API as well. I would recommend anyone to use some sort of a software like this. I just stick to it because, again, I find it convenient. There are a lot of alternatives, not affiliated. But yeah, you'd have some sort of entry, and I always DCA out, right? I will not grab the best price this way, because yeah, if I would have entered here, let me even use it. If I would have entered, again, as I entered, and I would have left here, wow, it would be a perfect trade, right? But you never know it will come here. Again, it's all probabilities. And so the idea is that I will DCA out somewhere as the price goes and keeps on giving.
So how is it? Like, what is your first sell usually? Is it like you take back initials or you just take a percentage?
I like as well, since it's a knife, and it's not guaranteed that the price will do full mean reversion. I will show a few examples later on. I like to sell, the first sell will be 25%, like within the first under the first minute. Because if you entered it correctly, usually you enter at overextension. And the reason, again, by the way, another 11 a.m. week, right? And what happens here on these weeks as well, stop losses, liquidations, which push price further from its average, conditionally or average fair price, how some would call it. So yeah, it just like, it will be revert, most likely. Unless there's another buyer stepping in and pushing the price further. We're not talking about that. It's already another probability. Okay, next. How do you actually trade it? Right, this BTC trade, which I took just recently, this was my entry. And if you look at this entry, it's on the reversal, right? On the reversal candle. There was a wick, there was large volumes coming out, and as well you have chopped down, but not much volumes coming out. So it means that kind of the reason, like the way how you would have these clear outs happen is that the price will go down as long as it's reasonable for it to go down. But if you have price going down like this, but volumes also go down, it means there's not much price reaction from it in terms of squeezing stops, squeezing longs. I mean, in this case, longs will overtake. There's no point in squeezing shorts. I'm getting confused in my thought. Squeezing longs, right? So you will just like, essentially, there's not much people willing to keep playing this game and stopping them out. Really good final week. Again, there was a lot of wicks like this, but this is a small body candle. Not big fan of candle analysis, but if you look at them for a long time, you would see sometimes like something like this, which happens where there's low volatility before some sort of either short term or either longer term reversal, depending what time frame you're looking at. This is not important at all, though. It's just something what I look for. It's a long week. And yeah, entry. Next morning, I closed some of my position. Then another morning, I closed even more of my position. And right now, the price is somewhere around here, I believe. I still have this position. I'll check it later.
You still have your BTC long. Yeah, that's the really recent one. Okay.
Yeah, that's just literally the one we're dealing with right now.
And this one you went spot, right?
This is futures. This perps.
Perps. So did you have a bit of leverage on it?
Yeah, since again, as I mentioned, I don't keep a lot of margin on my like this is Binance, my Binance account. It's the leverage.
Okay. So okay. So how do you keep your money? Then you spread the risk across different exchanges, and then you take some profit every month, and then you put them in another account, or you just try to grow the account itself?
At this stage, I've kind of reached the limit, at least for my personal execution abilities or for my strategies which I'm using. Like, there's not much for me into growing my account without trying to try different strategies. Some people have like, $200 million longs. I can't take these trades. Again, like as I mentioned at the beginning of the podcast, my risk tolerance is still pretty low, and I'm not willing to tolerate massive drawdowns. Like again, like if it's a stop loss, it will be a short one, or if it's a hard stop, as I would feel it on the exchange, like with actual order to execute my stop loss, or it could be simply soft stop where I will leave the position myself, like I'll manually close it if price doesn't go in my direction. So I don't let my losses stack massively.
Okay.
For this reason, I can keep. And as well, one thing about leverage. Let's say there's a beginner trader, he have like 10K capital, and technically, let's say he wants to trade 10K size, right? Realistically, he can keep 10K on this exchange, on perps, and use no leverage, or he can simply have $1,000 on that exchange, 10K as a reserve, and trade with 10x leverage. And technically, the only thing will change is that he will actually be better off because he loses the risk of blowing all 10K in one go, right? Due to unfavorable market conditions or just over trading. And his risk will be limited to 10% of his capital.
Got it.
And which is actually also important. I mean, if anyone is doing day trading, they have to have daily drawdowns where they stop trading. Because the worst trades, which I personally done myself, and I've seen a lot of traders do it, it's what's called retaliation trading, revenge trading, is when you had a few losses and you're trying to make it all back. And you take more risk, you take more leverage, and that's how you end up giving it all. For this reason, I don't know, my personal risk tolerance was 5% of my like as well of my initial margin. Of my capital which you're willing to trade, because again, I can have less margin. The point is, you want to have, if you trade, let's say 10K size, your daily max loss will be $500, right? If you have 5% daily drawdown limit. If you keep only 1K on your exchange, then you will have pretty much half of your margin as your stop loss. Like stop loss for the day. I'm not saying about for the position. Ideally, you want to be having as well some sort of smaller limits, because you don't want to, do one trade, hit your daily drawdown, and then just go out, right? And this is really important for traders who, for example, trade in prop firms. In Sydney, we have one firm called Star Beta. There are a few traders who I had a chance to talk to, and they literally have daily drawdowns as their prop requirement. And many prop firms employ it. I'm just talking about the one I personally had a chance to know. So what I'm saying is, anyone who's trading in a prop, they trade more systematically, they will be using daily drawdowns, and they'll be using it for a reason. It's just as well. I always, even when I look at the position, it's always risk first. So it's not about, how much will I gain from this trade? It's like, how much can I risk on this trade? And then I calculate how much I can gain.
Yeah, I see.
That's my mindset. And as well, that's what kept me alive during the 2020 and 2023 bear markets. And even during the recent dumps, you obviously will be losing sometimes.
Are you still traded crypto during the bear market?
Yes, and I got lucky because I was trading a startup, which is non-directional strategy. So I wasn't purely long. I've had some spot bags, which I got wrecked on. But I was trading startup with Spread Fighter team and the software.
You was trading what? Sorry, I didn't.
With Spread Fighter team. So the platform which I happen to co-found and as well take part in development. Initially, it started as a trading group focused on statistical arbitrage. So that's how we met each other.
Statistical arbitrage.
Yeah, we started trading StatArb, statistical arbitrage, but in particular pairs trading, and it was manual execution. We turned into a prop.
StatArb is statistical arbitrage.
StatArb, yeah, statistical arbitrage. StatArb. I might be mispronouncing
got it.
Because I'm fast. Yeah. Well, now we're both on the same page.
You speak. So, yeah.
I try to be pretty slow when I speak, but if I'm talking about where there's something to talk about, I tend to speed up. So feel free to slow me down if I'm way too quick.
No worries. Yeah, all good. All right, let's check what you have after then.
Well, so yeah, to finish this presentation, like this slide, how to actually trade, it's look for large volume candles, look for wicks, look for early signs of reversal. In this particular case, be willing to take risk, be willing to be wrong, cut it early if you're wrong, and DCA out. That's my principles. Just on the surface. There's always more to it. Again, from the intuition, I can be looking at open interest, can be looking at liquidation data, can be looking at, if it's not Bitcoin, I'm trading altcoin, I can be looking at Bitcoin. There's more factors to it, but if I was really simplified. And again, it's not always perfect. You have some bad trades. For example, entered pretty good here, just overextension, in my opinion, out of volumes out of now were choppy. Dropped some size, left. Even though I could have stayed here, again, my personal discretion at that moment told me, well, I don't want to take extra risk if it just keeps on pumping. It was pretty early and small move. I took the L, just paid for my commission pretty much, and it dumped. Doesn't have to be perfect. They could go wrong. Another situation where I missed out this week on JTO, I'll even draw. There was this week I missed out. I found this about early, a bit late, but I saw it kind of chopping and even not going much, so I thought it could be a good potential short. Did it, stopped out in the end. Right on this clear. Not the best trade, not the worst. Again, you see I cut it early. And I DCA out, so I reduce my position size when I'm in profit, taking some profit, and therefore covering for some stop losses. Because ideal trade, which I'm looking for when I'm knife trading, it's just, well, too far. It's something like this, right? If I'm right, I will be carrying it. If I'm wrong, I'll wait till I can carry it. And even that BTC long, which I also posted on Twitter, nice entry. Then I quickly closed some of it because I still wasn't sure. It was early signs of dump. And I was previously short from here. I was short around this price. So I took the short and I decided to flip into long because, well, that's what me felt at that moment doing. Turned out to be a pretty good execution trade. It was actually like I personally happy about taking this trade, even though technically I could have made more just by simply sitting in short. But you never know that at the time of when you're doing it. And obviously I had some kind of bias at that stage. So yeah, well, I took the long here, dropped some size, dropped some more size. Then it did a quick pullback. I added some size and yeah, it slightly round tripped. I pretty much took after comms 0.15%, whatever, after slippage. Not good, not bad, just happens. But it also shows, like I put this here because I found them quite early, but also because they show the essence of how I treat my positions.
Got it.
Don't forget, your strategy have to answer a single question: who do I take money from? Right? In this case, where it's a knife, you take money from people who don't care about price insensitive buying or selling. They don't care about price impact much. Or you take money from people who get liquidated and push price to forward. You're not taking money directly from them, but they push price higher so that you can enter at better price. Daily close rebalancing. This is the impact I was talking about. Like when you have UTC close, you'll have volatility spike. Same charts, but this time it's hourly. So it's 1 hour, right? This is the UTC close, 0, and you would see how market starts deviating on a dot. Because again, this is like 1 minute input. So we had no volatility, then we have volatility. We have no volatility, then we have volatility. And you would see some tickers literally like this one, launching a little bit here, launching a little bit here. This was during a different stage. There are moments where this will be continuing to mean revert. There are moments where it will continue to take momentum. It's, again, not free money if you don't know what you're doing. The point is you're still exploiting something. And if you have understanding of like why it happens and what to expect after, you can just position yourself accordingly. There are moments where I took the mean reversion trade. It didn't go. I join the momentum and I take the pump. Even if it's 5-10% right, you can be switching quite quickly. It doesn't have to be a knife.
So from what we see now, we could say that midnight UTC is a good time to look at for those volatility moves.
I would say at this stage there's less of an effect because again, this is not like something what magically happens. This is something what happens because someone else have an impact on it. And this was April 12, 2024, so pretty much a year ago. There was earlier in January, end of January, beginning of February, there was this effect spotted, and I even made a few posts about this when I again saw this effect happening, because there was a moment where it just literally stopped appearing on my screeners. Yeah, the main reason though why I'm again showing it, because there's more to trading than some people think.
Yeah, and which one are you looking at right now then? Which one do you find more interesting now?
What do you mean?
Like if this one is appear less, the one like where there's some moves around midnight UTC, you say it was more in 2024, which indicator you're looking at more right now, like those days?
It's still volume spikes. You'll have some situations where price just pumps out of nowhere. And one thing about it, let me just go somewhere where I can draw. Yeah, for example, here, just need some space. I mean, we'll have some price. Let's say there's some consolidation, spike out of nowhere. Depending on how hard the spike is, this can, I get another better example. Price is in downtrend. There are situations which happens like this sometimes.
Yes.
Right? Maybe even I'll draw it a little bit like this, because usually this happens to a certain degree. If this happens really rapidly, there is higher chance of it mean reverting, because it could be fat finger or just big buy or spoof, or not even spoof, but like, attempt for momentum ignition to offload this price, or even someone just clipping their short exit, right? Could be anything. You don't know. The point is, these rapid moves, they tend to have better chance of mean reversion. It doesn't mean they won't continue grinding like this, which you will see sometimes. Doesn't matter at all. But I'm not even interested in like whatever happens after. If I have an entry somewhere here, right, I can ride the potential pullback.
Okay.
You don't have to trade it all. Sometimes you can even, like, if you missed this, right, you can try taking the pullback into continuation. There's so many approaches to it, but it's just like, again, what you're looking for. Another example is like for breakout, would be not mean reversion, but breakout. If we have, for example, maybe like, a classic cup and handle, right, scenario, right? Sometimes this is pretty clean entry from technical perspective, because again, you have stop losses here, 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 right? Like just different shorts trying to short it, right? Having stop losses here. If price were to breach this entry, it will cause a spike. That's why you have spikes from breakouts. That's how it looks like, even though, like I mentioned earlier, I just didn't draw at that stage, but it's always better visually.
Got it.
It's never clear what will happen after mean reversion, or like this, or just like this, right? To take these positions out, you can have this literally like always. And even in crypto, what you have quite often happening, what also another way to look at it is if you have consolidation like this, right? And then you have something like this and it pulls back, right? And their volumes came out on this area. Yeah. It's a pretty good sign that price showing some strength and will be taking this side next.
Okay.
It doesn't mean it won't do this. It doesn't mean it at all. But if you were to enter here, you have some sort of better expectation because it already took the lows here, the stops here, the liquidations here. So shorts could be next.
Got it.
Okay. Daily close rebalancing, a closer look here. I think this is another one. Also, you can see this. You would also see, for example, like one chart here, like, like this line kind of goes from here. They not highlighted in color because they mean reverted back into price action, like into just BTC, right? But you have some sort of things which just start spiking here and just starts consolidating. My drawing is messy. I'm just trying to condense this information.
No worries. It's good.
The idea is that this used to happen quite often. 5th of April, 1st of April, 12th of April. Around April time, it was a year ago, it was really good. And what should you do about it? Well, first of all, you need to understand market structure. And when I say market structure, it's quite a broad term. But this is technically the structure of the market, of the perpetual market, like, just from maybe less literate sense, but I still like to refer to it. And this is simply a spaghetti chart. But due to the highly correlated nature, you can refer to it just because that's how market operates and how it's structured at the moment, right? It's mean reversion or momentum based, even though some quants in the comments could definitely correct me on it. Well, you need to understand how market structure operates, how liquidity operates, because market structure is usually referred to already like on the execution engine side. It's order book, order flow, and just as well matching engine. And what I drawn previously from the stop loss hunt perspective, this is already also part of it. Well, you find deviation and then you execute. I don't say take long or short. I say you execute. You could be wrong, you could be right. Depends on your thesis, depends on your approach, and
so do you find any deviation that are interested to look into those days?
Oh, that's a good question. I mean, the market being pretty boring, I would say, aside from a few scenarios.
Have you been dabbling with meme coins?
Not at all. I've actually had a situation on Solana where I even posted as well on Twitter. In November, I discovered one of my older wallets, which, again, I done some trading on Solana back in December 2023. Just when it was all starting with beef and all of that good stuff. I took one trade. It was Bongo Cat. I grabbed 2 or 3x move, closed partially, as usual, the DCA out, and it dumped. So I'm back holder now. Anyway, it was fun. I just wanted to gamble. And that trade was done, if I remember correctly, like in January or February 2024. Then in November 2024, I check this wallet because I haven't looked at Solana chain for so long, and I'm like, well, what's going on there? I log into this wallet and I see balance, which I think it's a bug. That thing did X, roughly.
What?
Yes, because I was entering at around 100k market cap. When I found it, the market cap was like 65 million. And it went up to 100. I sold a bit earlier there, even though I didn't sell one clip. And
how much did you make then?
No comments, but I done a few other trades as well after. I took long. The dog is long. I took a chill guy from 2 million, thanks to a call in Sportfighter Discord as well.
Wow. I can find your wallet, Nick, because if I use Talkchain.com, I can just go into a wallet finder. And then depending on what you say, which token you bought and when, I can find it, or even with the PNL in USD. So that would be pretty easy to find it. But I'm not going to show it publicly. What I'm going to show publicly instead is some alpha, because Talkchain tracks all the whales and tracks all the smart money, so you will know what are they accumulating and getting ready to dump in real time. It's really easy to know which coin will be the next one to explode, because when everyone is selling and the smart money is accumulating, you know something can happen. So go to stockchain.com if you want to get your alpha with on-chain analysis, because that's the real one in this market. And thank you for sponsoring.
Bro, chill guy from 2 mil to a billion. Even though I still have this position, like remaining, I always DCA out, so I still have some sort of it, and it still shows me like multiple X's because the market cap is still like close to 100 mil. Then I've started clipping into random tickers, and at this stage I have probably 50 bags, 50 tickers, which are just like, I'm back holder forever. And I kind of gave away a lot of my profit on Solana.
Yeah,
just like trying to replicate the same success, and you've seen what happened on Solana chain, because I've done it in November. December was nice. January was quite all right. February was, already mid-Jan, Feb was disaster. Yeah. Well, I still kept around like 30% of the total profit. And even though it's really sad, I kind of treat it, again, like it's still free money, because if I would have sold this whole bag back then, it wouldn't be even the case. And even 30% of 700x pump, it's already pretty decent position. So well, kind of grateful for it. A good lesson. It was a roller coaster of emotions, because when I got back into Solana, I felt myself young again, like from trading perspective, because I've done already a lot of trading on perps. I already kind of like trying to be less emotional, and it's just like, whatever. There it wasn't, whatever. And it was emotional, and I kind of needed to survive this stage once again, so I can kind of like understand the psychology of trading from a different perspective better. Because I talk a lot about risk management and execution, but your execution is directly correlated to your emotional part, right? If you're afraid of losing, if you're scared to enter, like it impacts your execution. And when I'm talking about knives, which like where good entry exists for solid 20 seconds, like it obviously matters. If you hesitate for 5-10 seconds and you want to push some volume, you will be getting terrible price for a field.
Got it. Nice. All right. So where should we look out for deviation now?
I wouldn't say look out for deviation. This was just more of a perspective on how you can look at it. Just one perspective from one trader. I'm not saying my perspective is the most appropriate one. It's just one of them. There are a lot of other traders who, for example, don't use it at all and might be way more profitable than me. There are traders who could be using it and could be way more profitable than me just because they do it better than me. One thing, though, of what helped me a lot, and one thing I even wanted to talk about here, since I mentioned, it's going to be more beginner friendly, even though as we were going deeper, I was covering more advanced topics. I would say that there is some sort of evolution for every trader. Just because in my case, it's just, I started with DOM, scalping, breakouts, limit order front running, then moved to stat ARP, right? Which in my case, DOM scalping was purely momentum driven trades. Stat ARP is purely mini reversion trades. And before, when I was just doing only scalping, I never took knives. I never even considered taking knives. I found them scary. After doing stat ARP and understanding the idea behind mini reversion, I haven't even watched a single guide on how to trade knives or something. I just watched a lot of my pairs where one leg just bumps and then, reverse back. And I'm like, what if I don't have a second leg? What if I'm directionally short?
I got it.
Manually, way less hassle, because building stat ARP infrastructure is pain. I have like I wouldn't be able to implement it without spread fighter team. And like it's quite a challenge to process a lot of data all on your own and maintain infrastructure, maintain as well. You can have just stable data flow processing, because in this case you also have to calculate your PNL on the server side. Since you have long and short legs, you have to allocate. If you trade in baskets, it's another story where you have more than 2 legs. So yeah, I'm like, well, can I trade knives just like solely? Well, apparently you can. Apparently you can.
That's good. Yeah, you find one thing and then try to develop more around it. I like it.
Yes, and I also tried Algo trend following, simple EMA strategy, EMA crossover. So I tried various different things. Momentum, trend following, which is a part of momentum, but it's kind of big longer horizon, in my opinion, if we dedicate it.
Yeah.
Stat ARB, mini reversion, and this kind of collective experience led me to what I trade now for already a solid couple of years. Even though like I was scalping properly, like profitably for a year with 6 months of prior learning. Stat ARB I've done probably for about a year. As well, there was some moment of just even taking a break from trading during 2023. I wasn't really actively trading, but that's Stat ARB what saved me during that period, because I wasn't that directionally biased. I was just trading in market inefficiencies. And all of this collective experience led me. So a lot of beginners who just start and they think it's all about one good strategy, right? It's actually not. It's not about the perfect strategy. Like trading is a skill game. It's not luck game, right? Where you have perfect strategy, which kind of aligns with market movements.
Yeah, got it.
And the biggest lesson from all of it is probably like every strategy works until it doesn't. So you always have to adapt.
Yes. Yes, every 6 months pretty much, or even less. That's the crazy thing.
And even right now, like since you've been more on chain, you even feel it better, because like I remember when I started in December 2023 with Sol, just purely out of curiosity, there were longer pumps, like VIF, Peanut, Mudang as well later on as well. But December, January, it was like rotation after rotation after return. Like I found it super annoying, and I found it like it's just weird. It's not trading. Like what was happening there later. It's also a speed game actually, so I respect it. But it was super weird, full of rug pulls and kind of just like pure like PvP.
Yeah, it is crazy. Well, thanks, Nick. Like that was super dense. Like that was a masterclass. I'm gonna watch it because there was a lot to learn from it. Where should people follow you? You have Twitter? Do you have other social media, whatever, where you post your research?
I have 99% is Twitter. It's Nick _ Algo.
Yeah,
I also have YouTube with the same handle, also Nick Algo. Even though I don't post there, like I don't record videos. At certain stage, I've thought of maybe becoming a YouTuber, but I kind of like fine. Maybe I will come back to it. I just find it's like daunting to record like videos consistently while focusing on other things. So maybe there will be a stage of me where I'll try to actually explain. And even what we discussed here today was great talk. I probably can even just take my ideas and decompose them into 5 different videos. Not sure I will though. But I would rather leave them here on this podcast.
Cool. All right.
Yes. Well,
thank you, Nick.
Thanks for having me here again. Thanks for listening, and everyone who stayed till the very last moment. I hope you learned something.
Yeah, I'm sure they will, because I did. So thank you for sharing this.
Thank you for having me.
Have a good one.
Stay safe in the markets.
Stay safe.